All right, so just as a reminder, remember for Social Security and Medicare taxes, we have employee paid taxes, we have the employer portion, we have the Social Security, also known as OASDI, and remember all of these are referred to as FICA taxes. 6.2% for the employee portion, 6.2% for the employer portion, and then we have the total of 12.4%. And remember, we have a wage base, I'll put it here, of 160,200, meaning once we reach that wage amount per year per person, they're no longer subject to Social Security tax. Okay. Then we've got Medicare tax. Better. No, these markers keep disappearing. This one works. Which is 1.45%. That's no better. For the employee portion, 1.45% for the employer portion, for a total of 2.9%. This is applied on all income from the first dollar up to infinity. So there is no wage base for it. Okay. And then we've got that additional Medicare tax. And your book refers to the Medicare portion as HI for health insurance. I prefer to just call it Medicare and abbreviate it as MC, but that's what your book does. So additional Medicare tax kicks in on incomes over greater than $200,000, and it is 0.9%, and it is only on the employee's portion. Right? The employer does not have any responsibility with regard to the additional Medicare tax, only the employee does. So the total over there would be 0.9%. Now, you'll oftentimes see these two totaled together for 7.65%, 7.65%, and then this is 15.3%. So just as a reminder of what those calculations look like. I had mentioned that we were going to talk about self-employed individuals as well. So for employers, remember, or for employees, the tax is shared equally between the employee and the employer. But for self-employed individuals, there is no employee-employer relationship. It's just the one person, but they still have to pay these taxes. So the tax rate for self-employed individuals is the total amount over here. So, and again, I had mentioned that was something that surprises a lot of people when they start their first time being self-employed or starting a business, is the fact that on top of the income taxes that they're subject to, they've also got this big 15.3% tax rate for Social Security and Medicare tax for FICA taxes. So we went through these calculations. I'm not going to go through those again, but I do want to talk about, oh, you can't really see that. Let's download it. Okay, so if these taxes apply per person per year on all earned income, so that is income that you work for, as opposed to unearned income, which is like passive income. So interest income, dividend income, other types of investment income, or if you're a passive investor in a business, but you don't actually provide any services for that business, that would be considered unearned income. Earned income is where your efforts, you have to put effort forth in order to generate that income. It may be mental effort, it may be physical effort, but some sort of effort is involved. And so FICA taxes only apply to earned income. But we've got a couple different ways that we can have earned income. Actually, we've got 3 different ways we could have earned income. We could be an employee and have earned income that way. We could be self-employed and have earned income. We could also be a partner in a partnership, and that is considered to be earned income for the partner, for the person who owns it, if they provide services to that partnership. With a self-employed individual and with a partner in a partnership, the taxes that apply are these total taxes, otherwise known as SECA tax, Self-Employed Contributions Act. So the taxes are the same, but there's kind of 2 separate acts that cover these. The FICA, Federal Insurance Contributions Act, and then SECA, Self-Employed Contributions Act. But it's both referring to the same taxes, but those tax rates are different because it's doubled than for those individuals that are self-employed. However, that overall limit or wage base of $160,200 applies to all earned income per person per year. So that means it's possible for somebody to have earned income as an employee and have earned income as a self-employed individual and have earned income as a partner in a partnership. You could have earned income from different sources. All of that earned income together combined, you still have that wage base of $160,200. So when you have somebody that has multiple sources of earned income, all of those amounts have to be combined to determine whether or not they've reached that wage base. So if a self-employed, so this is for self-employed, also for partnership purposes. If the net earnings exceed $400, that means then they are subject to these SECA taxes. If their net earnings are $399, they don't have to worry about that. Once they reach $400, that's it, this kicks in. And it says here net earnings. So that's not the gross earnings, not the total earnings. It would be after any expenses that are, any eligible expenses are subtracted from their earnings. So for example, if you have a bookkeeping business and you pay a monthly subscription for QuickBooks, and you pay for paper, and you pay for office supplies and different pieces of equipment, a printer, a computer, all of that stuff, your gross income would be the total amount that you bring in before any expenses. So let's say you earned $10,000, but you had deductible business expenses, qualified business expenses of $5,000 that you spent money on. That means your net earnings there then are $5,000. So the tax is applied to the net, not the gross. So at least you've got that. You've got expenses that you can use to offset that income before it is taxed. If you have more than one business, which is possible, there are people that have several businesses or several side hustles. Maybe they drive for Uber, and then at the same time they go to the farmer's market and have a farmer's market booth, and then they're also an employee somewhere. You know, there are lots of people with multiple jobs. If there is more than one business, self-employed business, you can combine those 2 businesses together for purposes of applying the tax. So if you have a gain in one business, you have net earnings in one business, but you have net losses in another business, you can combine those together before you have to apply the tax. So say one business you had net earnings of $5,000, but in another business you had losses of $3,000. Combined, that would be $2,000 then of net earnings that would be subject to the taxes. Okay. Like I said, the SECA tax combined is 15.3%, this amount right here, which applies to both the Social Security and there's that HI, the Medicare tax, plus that additional Medicare tax also applies to self-employed earnings. It applies to all earned income. Okay, so remember, you can be an employee, you could be self-employed, you could be a partner in a partnership. If you are providing effort toward that partnership, you're doing some sort of work for that partnership, that's considered to be earned income, and therefore would be subject to the self-employed, these FICA taxes. It's also possible, and I gave you an example, to have wages from a job and self-employment income together, but that cap of $160,200 still applies in total to all of that earned income. What that means is when you're an employee, your employer is going to keep track of this $160,200. They're going to stop withholding Social Security tax once you reach that $160,200, but they don't know anything about your self-employed income, right? They don't know that you've got a side hustle going on. So you have to keep track of whether or not you've reached that $160,200 threshold, because if you have through your employment, that means you don't have to pay it then through your self-employment. Okay, and I'm going to give you an example of how that looks, and we're going to go through some. I've got some sample problems as well for us to take a look at. So we've got Celia. So Celia's wages from her job are $170,000. So we can see right here for Celia, she's above that wage base, right? She's exceeded $160,200. So her employer is going to take out the maximum Social Security up to that $160,200. After that $160,200, that additional, was it $9,800 that she earned through her employer isn't going to be subject to Social Security tax. It'll still be subject to Medicare tax. She hasn't reached $200,000, so they're not going to take any more additional Medicare tax out. But she also has self-employment income of $15,000. So on that $15,000, she doesn't have to pay any Social Security tax on that amount because she already reached that wage base through her employer, right? So no additional amount of Social Security tax. She doesn't have to pay any more Social Security tax for the year. Starting next year, it's going to start all over again, and she'll go back to zero. But for that, for the self-employment tax or the self-employed income of $15,000, the only thing she's going to have to pay is 2.9% of Medicare tax. But remember, it's 2.9. She's going to still going to have to pay both halves of it, not just the 1.45, but both halves because it's self-employed. They've done the calculation there for us of $435 for each of those. So her total that she's going to have to pay is $435. Now, again, that's before she's done any calculations on income tax or anything like that. It's just the FICA taxes that would be applied to her. All right, let's look at another example. This one's a little bit more complex. So now we've got Preben. Preben has wages from his job of $68,250. So he's an employee with wages of $68,250. He also has self-employment income of $94,500. So if we were to add together $94,500, I'm going to erase this. And $68,250, just to see what his total earnings are. to 162,750 are his total earnings from earned income. He's reached that wage base of 160,200, but he didn't reach that through his employment, right? His employer is going to take out the 6.2% for Social Security tax from the employee's portion, and then the employer is going to also pay 6.2% toward their portion on all of those wages. But for the self-employment income, he's not going to have to pay Social Security tax on the entire $94,500, because with that self-employment income, he's reached that wage base, right? So how do we figure this out? Take the wage base minus the amount of wages that were earned from employment. So 68,250. 91,950 is remaining that would be subject to self-employment tax. So of that 94,500, only $91,950 will be subject to Social Security tax. All of it is going to be subject to Medicare tax, because all of it, there's no wage base. He hasn't reached $200,000 in wages, so we don't have to worry about the additional Medicare tax. He's going to pay $11,401.80 in Social Security taxes, 12.4% of $91,950. Does everybody get that? Why it's $91,950? Even though he earned $94,500, he's only taxed for Social Security purposes on $91,950, because that's the amount that gets him up to the wage base. Does that make sense? Okay. So 12.4%, so $11,401.80 for Social Security. And then for Medicare tax, though, he's gonna, his wage, remember we had wage base times the rate. The base for Medicare tax is different from the base for Social Security tax in his case. 94.5, all of it is going to be subject to Medicare tax at 2.9%. So his total self-employment tax is going to be $14,142.30. The big old chunk of change. Questions? There is in here, let me get in here. I have a step-by-step guide in here as well for calculating the FICA and the SECA. So first thing you would do, calculate the FICA, Social Security and Medicare on the W-2 wages only. Okay. In your homework, when they ask you to do this, they're just asking for the employee's portion. They're not asking for both, employee, employer. Okay, I'm not sure that they make that real clear on all of the questions. So just kind of a heads up there. So you would calculate just the employee portion. Then you would calculate the Medicare tax on total self-employment earnings. Well, they call it HI. HI and MC are the same thing. I'm used to calling it MC. In practice, that's what I always called it, or I would always abbreviate it as MC. I never heard it referred to as HI until I started teaching this class. So, but that's why you'll see me say that, but they're the same thing. So MC and HI are the same thing. Calculate the Medicare tax on the total self-employment earnings, and then subtract the wage base from the W-2 earnings and calculate the full SECA tax on that portion of the self-employment earnings, and then add all three together. So I've got some problems here, and we're going to go through them together where we'll practice that. I'm actually going to keep this up. I actually have a couple of sheets for you guys. Mm-hmm. Yeah. That's the wage base, Social Security wage base. You're welcome. All right, so let's look at these together. Actually, let me see if I can turn this thing on. I've never used it, so I'm not 100% sure. So, looky there. Is that focused or? Sort of. I know you've all got sheets there too. All right, so let's take a look at this one together, David. All right, David earns $45,000 in wages. It says 2024. 2023. Sorry, I put the wrong year down. I don't think that's, is it focused? I don't know how to focus it actually. Is that any better? A little bit. Okay. So David earns $45,000 in wages. Calculate his Social Security and Medicare taxes. Start out easy. So how would we do that? Let's just do the employees portion here. So the $160,200 would be the wage base. So up to $160,200 would be subject to Social Security tax, but he's obviously well under that, right? So really with this problem, we don't have to do anything with the $160,200 because all of that income is going to be subject to Social Security tax. All of it's going to be subject to Medicare tax, right? So in order to calculate how much would in total be withheld from his paycheck, or not from his paycheck, but in total for the year, what would the calculation look like? 45,000. But let's just take, so he's an employee, and let's just look at his portion that would be withheld. So what's the tax rate just for the employee? 6.2%, right? So here's the Social Security part. Medicare part is going to be, what's the wage base? 1.45, that's our rate. What's our wage base? Or our tax base? How much are we going to multiply the 1.45% by? How much of his wages are subject to Medicare tax? Mm-hmm. All of it, right? There's no, all of the income would be subject to Medicare tax. So we're just going to multiply those amounts. So $2,790 for Social Security tax. And $652.50 for Medicare tax for the year. Okay? Questions about that one? So because he's under that 160,200, we don't really have to do anything special. We're just going to take his wages and multiply it by the tax rate. Right? Okay. Let's look at the next one. Now here is where we do need to be concerned about that wage base, because we've got Sophia that is earning $175,000. Calculate her Social Security and Medicare taxes. So for Social Security, how much is going to be subject to Social Security tax? We're looking at number 2. How much is going to be subject to Social Security taxes? There's a maximum amount per year that will be subject to Social Security taxes. Right. 160, 200. And what's our tax rate? 6.2%. All right, and then for Medicare, otherwise known as health insurance, how much is subject to Medicare tax? All of it, exactly. Okay. Here is... We're doing some practice problems. Yeah, no problem. All right, so, whoops. So 9932.40 for Social Security tax. And 2537.50 for Medicare tax. Okay, this is a good illustration of the different tax base for each of these different types of taxes. Okay. Remember, Social Security is never going to be more in 2023. Is never going to be more than 160,200. And Chiki, I've got the wrong year up there. It should say 2023. I put 2024 down. All right. Questions about this one? Because the wage base would be different in 2024. Yep, I think it went up to 170,000 something in 2024. Every year. Every year. Yep. It is indexed for inflation. So if your goal is to get to that wage base, you're going to be chasing it more and more each year. The wage base is indexed for inflation, but most of our raises are not indexed for inflation. So, all right, let's look at number 3, Liam. All right, so Liam earned $130,000 in 2024. Calculated Social Security and Medicare taxes. So how much of his wages are going to be subject to Social Security tax? 130. Yep. 130. Tax rate? 6.2%. How much of his wages are going to be subject to Medicare? Same, 130. Okay. So 80/60. $18.85. All right. Number 4. or here, oh, we've got Emily who earns $310,000. So she's got some additional Medicare tax, right? All right, let's add that down here. All right, so how much of Emily's $310,000 is going to be subject to Social Security tax? Yeah, exactly, 160, 200. Can't go over that. Can't go over that in 2023, right? And for our problems in our homework. All right, so what about Medicare? Regular Medicare. 310,000, right? All right, what about additional Medicare tax? How much of her income is going to be subject to additional Medicare tax? What's the cutoff for additional Medicare tax? All amounts over right. So how much of that 310 is going to be subject to additional Medicare tax? 110. Yep, 110. And what's the tax rate for the additional Medicare? So 0.9%, but when you're multiplying it, yes, 0.009. So 160, 200, 99, 32, 40. $44.95. $990. All right. Now let's look at James. James earned $210,000. How much is going to be subject to Social Security tax? Exactly. 99. What is that? I have to do the calculation again. How much is subject to Medicare and 210, right? And how much is subject to additional Medicare tax? 10,000, exactly. See, you guys are becoming experts now. All right. 99, 32, 40. All right. Good deal. Now let's look at Olivia. All right, Olivia earned $165,000 in 2024. How much of that 165 or 2023? How much of that is subject to Social Security? 160, 200. Which is the reason why I didn't even erase that. How much is subject to Medicare? Right. How much is subject to additional Medicare tax? That's right. No, 0. 200,000. Only amounts over 200,000. Yep. Yep. So 2392.50. All right. Let's look at the next one here. Okay, now we've got Noah. Noah, who is married and filing jointly, earned $290,000 during 2023. Calculate his Social Security, Medicare, and additional Medicare taxes. Now, kind of threw in a little curveball for you. For our purposes, we don't care yet about what his filing status is. In Chapter 4, we will care when we calculate the federal income taxes withheld. And just as an aside, it's important when he's filing his tax return, because actually, and don't get too hung up on this because we're payroll accountants, we don't have to worry about personal income taxes yet. But from the income tax side, that additional Medicare tax applies differently depending upon filing status. So if you're married filing jointly, the limit is actually $250,000. But for payroll purposes, we always withhold once we reach $200,000. Okay? It's up to the employee to correct that and to make the correct adjustments on their individual tax return. Okay? For our purposes, we're always going to use the $200,000. Okay? So that married filing jointly right now really doesn't matter to us. It's just kind of thrown in there to trip you up, okay? But that's okay. All right. So Noah earned $290,000. What Social Security, Medicare, and additional Medicare taxes are we going to withhold? So what's his Social Security wage base? I'm sorry? Yep, $160,200. How much are we gonna, how much is, are we gonna, what am I trying to say? $290, thank you. Get caught up on my words. And then how much of that income is going to be subject to additional Medicare tax? $90,000, exactly. So 99, 32, 40. 42, 5. And 10. All right. Now we've got Emma. I don't have any here that have. Yes, the self-employment ones are the last two. So now we've got Emma. All right. How much of that income is subject to Social Security tax? Exactly. $160,200. How much is subject to Medicare tax? 20. How much is subject to the additional Medicare tax? 320. All right. So you can see how this is a regressive tax, right? But she's got $520,000 of income. She's paying the same tax as somebody who made $160,200, right? So it's that tax, that average tax rate is actually going down for Social Security tax. All right. Ethan, again, married filing jointly. We really don't care. Earned $265,000. So how much is subject to Social Security tax? $160,200, right? It's gonna be the same. How much is subject to Medicare tax? 65. And how much is subject to additional Medicare tax? 65,000. Right. I'm not going to multiply that out. All right. Now whoops. Now we've got Isabella. Isabella earned $125,000. How much of that is subject to Social Security tax? All of what she earned, $125,000. So we're going to go up to $160,200, but we're not going to go over it. She earned less than that. So if it's less than the $160,200, it's whatever they earned. Exactly. Yep, $125,000. How much is subject to Medicare tax? $125,000. How much is subject to additional Medicare tax? None. Right. All right. Okay, let's see if we can follow my steps here. Let me see if I can follow my steps here. This one's a little bit different. So now we've got some employment income and self-employment income. All right, let's do this. Let's calculate for each of these positions how much each of these are. So let's just look at his employment. How much of he earned $95,000 in wages, $65,000 in self-employment income. So let's just look at the wages for right now. How much did he earn? How much of his earnings was subject to Social Security tax from his wages? All $95,000. How much was subject to Medicare tax from his wages? Same, right? $95,000. Additional Medicare? None, right? Because he's not over the $200,000. So let's do those calculations here. So $58.90. $1,377.50. And 0. Okay, so there's our wages. Now let's look at self-employment. Do the same thing here. Social Security, Medicare, additional. Let's see if my steps were any good here. So I've got, I know you can't see that right now, but calculate FICA on W-2 wages only, which we just did. Calculate the Medicare tax on total self-employment earnings. All right. So he has $65,000 of self-employment income. All of it's going to be subject to Medicare tax. So let's do that one first before we do Social Security, because that's easy. How much is going to be subject to Medicare tax? All $65,000, right. What's our tax rate? Exactly, 2.9%. All right. Now, my third step is subtract the wage base from the W-2 earnings and calculate the full SECA tax on that portion of self-employment earnings. All right, so actually I think I've got that backwards. No, it should be subtract the earnings from the wage base, because then that's how much is left. All right, so we've got $160,200 is our wage base, minus $95,000 for his for his earnings. Okay, so he has remaining $65,200 after his employment earnings. He can earn up to $65,200 more that would be subject to Social Security tax. He earned $65,000. Did he reach that wage base? No, he didn't. So how much of his self-employment earnings are going to be subject to Social Security tax? All $65,000, exactly. So $65,000, what's the tax rate? 12.4%. No additional Medicare tax, right? This would still be 0.9%, 0.9%. But he doesn't have any. All right, so let's see. So 65,000 times 12.4. 8,060. Oh, 029. 1885. Look at this. So he earned $30,000 more as an employee, but he's paying more in these Social Security and Medicare taxes as a self-employed individual because his tax rate's so much higher, twice as high, right? Okay. So if the problem asked you, and does it ask for the total? I suppose. I mean, it says to calculate it, but you would want to add, in total, you would add the Social Security here, Social Security there, Medicare there, Medicare there. If there was any additional Medicare, you would add those two together. Okay? Let's look at the last one. All right, this could be this could be fun. Okay. Okay, now we've got Charlotte. Charlotte earned $190,000 in wages and $85,000 in self-employment income. So how much of her wages is going to be subject to Social Security tax? $160,200. Exactly. 99.3240. How much is going to be subject to Medicare tax? How much is going to be subject to additional Medicare tax? None. Exactly. None yet. Exactly. So, $27.50. All right. She earned $85,000 in self-employment income. How much of that is subject to Social Security tax? None of it, right? None of it, because she already reached the wage base, the Social Security wage base, with her at her employer. So she's not going to have to pay any Social Security tax on her self-employment earnings. That's a huge savings. How much of that $85,000 is going to be subject to Medicare tax? All of it, exactly, $85,000. All right, now, how much is going to be subject to additional Medicare tax? $75,000. How did you calculate that? Right. So we can add them together. What do we have? 190 plus 85 gets us to 275. So 75 is the amount over. Exactly. Whoops. 24.65. All right. Helpful? Help to kind of solidify all of that? We just finished this up, but you can have it to work on. Sorry. Okay. Those are all of those. Now, I do want to show you, and we'll probably just let you guys go through these on your own. There is another set of these that you can practice with under the in-class activities. For the Social Security, yeah. Yep. And yeah, until you get to the 200,000, then you're paying that additional Medicare tax, but the tax rate on that is so much lower anyway. Actually, I think, no, I have these. I printed this out for you. So these are very similar problems, different numbers and stuff, so you can practice a little bit more. We won't do these right now because I've got another sheet. That we're also going to work on. Okay. You're welcome. Okay.